Hey everybody, it's Jimmy and Bill. So today what we're going to talk about is, at least here in Florida, people are having a hard time getting financing on condos. And there's a few reasons why. Like, people want to, they fall in love with this condo, they see it, and then they're like, okay, it's perfect. The HOA fee they could afford, and then they find out they can't get financing for it. So that's what we're going to talk about today. So if you like this kind of content, do me a favor, subscribe. It really helps out the channel and it's greatly appreciated. So let's get started. Okay, Bill, what's one of the problems why lenders won't lend?
Well, sometimes they won't lend on a specific property because the condo itself isn't fully insured, as we kind of alluded to here, or because they've had to take some cutbacks. So their master plan, they've made some trade-offs in essence to save money.
So basically, it doesn't meet the requirements of the replacement cost pretty much for the lender.
Right, so we have milestone reports now, and you have to have reserve funds and things like that are required. So for instance, if you need to put in a new fire pump, new elevators, sprinklers, things of that nature that have to be replaced over time, the state is now saying that deferred maintenance is a thing of the past, and you have to be funded enough to cover those types of things. And sometimes insurance companies, people are taking a cutback to kind of save costs. So, and then...
Well, especially in South Florida, one of the biggest problems we have here in Florida is that basically insurance got crazy, and these condo buildings, condo associations just can't afford the new premiums, because some of them are seeing 20-30% increases.
Yeah.
And they're like, hey, wait a second, we don't have enough money to pay for this, so what we're going to do is we're going to cut back on our coverages.
Right, because just like everything that we've been talking about, it's not just affecting, residential markets, single family homes, townhouses. It's affecting high-rise condos as well, where you would typically, I'm not an insurance agent, but when you have a master plan for the entire building, because it's a communal living type situation that covers the exterior, the structural, that kind of thing, then you're insuring basically the interior of your unit that you purchased.
Right.
And that's fine, but the master plan has gone up so much now to help offset some of the costs. They're making adjustments,
And the adjustments is not good enough, there's not enough coverage for the lenders to lend.
Right, because the lenders want to make sure that their investment is protected.
Right.
That's what it boils down to.
Right. Here's another problem, Bill. According to this article, which I'll post below, 30% of condo buildings built between, say, 1960s and I think it was 2000. Let me take a look real quick. 1990s.
Okay.
Okay. So basically, they haven't replaced their roofs. So
that makes sense.
So the lenders are like, hey, you're gonna have to replace your roof. And since you can't replace your roof because you guys don't have the funds, we're not lending on this condo.
Right.
So it goes right back to the maintenance things.
Right. So kind of while we're on, so what happens is, you're paying your condo dues, right?
Yep.
Just, like everybody's got their HOA or their CDD, et cetera, pays for the infrastructure. You're paying your condo dues. And what generally has been happening is people are getting upset because they don't want their condo dues to go through the roof like everything else.
Right.
But everything is going up. Insurance, all that stuff we've been just hammering down on. So because of inflation, typically, actuarial studies have been done by the management companies, and they predict these type of things.
Right.
But sometimes there's a shortfall because with the pandemic, cost of goods went through the roof, no pun intended. So, it's caused an unexpected increase, which has now, plus the issues with the laws, it's now forcing people to get structural, inspections, things that weren't normal before.
But the whole thing is, you can't go from like, okay, I'm used to paying $500 on HOA fees, and now they want an additional $1,000,
Right.
for special assessment. Oh, it'll be just for a year or two. People just can't afford that kind of stuff.
Exactly, and that's why you're starting to see some buildings, according to this article anyway, that are trying to find creative ways to save money.
But their creative ways is by cutting back on insurance, which in return, people can't get financing. So,
correct.
So it's becoming a really big problem, especially with older buildings. Like, in my opinion, if I was buying a condo now, I would want to get into a newer building.
Mm-hmm.
Like in Miami, some of the buildings are pretty much going bankrupt.
Yeah.
So investors are coming in.
Right.
Okay. And they're buying everybody out, and they're knocking down the buildings and then building brand new ones.
Right. Super luxury, high rises, things like that. And then that's, and that turns into another unfortunate situation because, yes, did you get paid for your condo when they, basically took over and bought you out? Yeah, but now you've got to move, start all over again. Maybe you haven't had a mortgage in 10 or 15 years. The tax implications on all of that. There's just a lot of things that, it's unfortunate.
Do you know, I read an article, there's one building down there that was not condemned, but they told them it's not structurally sound.
Uh-huh.
And they didn't have the money to fix it up.
Okay.
So they told the people, get out till the building is fixed.
Right.
And what's bad about this one is, the situation was, they still have to pay they still want the HOA fees, the mortgage companies still want the mortgage fees, but they're not allowed to live there. They gave them like 24 hours to get out.
Because it was potentially structurally unsafe. So for their safety, and I get that, but at the same token, something needs to be remedied, obviously, because the bills still come in, as you've and I've had these conversations. No matter what, the bills still come in.
I mean, the renters, yeah, if they're renting in the building, that's
right.
fine, because they'll just,
But there's still an owner there that is renting to somebody, and, let's say you don't have a mortgage, hypothetically. Yeah. So it's not affecting you the same, but now you've had to go and find an alternate means to live, which means now you have to pay rent. An additional unexpected expense.
Yeah, but imagine getting kicked out of your place because it's not safe, but they still expect you to pay everything.
Right. I don't know, that's super sad. That's super sad in that situation, and very unfortunate, and hopefully that one got remedied up.
Yeah, no, I think it's more current.
Oh, that's a shame.
Yeah. So Bill, here's another thing, okay, according to this article. At least in Florida, a lot of these buildings can't find insurance, so their only option is Citizens.
Right, the insurer of last resort is what Citizens was originally intended for.
So what does it say about them with the Citizens insurance?
Yeah, so what happened is, and this is another issue with insurance, whether it's a condo or a single family home, all of them, is being an insurer of last resort. That's what it was supposed to be, but because people are trying to save money, they have migrated over to Citizens, and they've increased from around 1,600 policies or 1,600 buildings to a little over 4,200
really
buildings. So it's like 162% increase just in the last year. It's insane.
So what kind of advice would you give people that want to buy a condo?
I would say really, really look at the condo, and please make sure that you get the budget for the condo. If it's, as like right now, we're coming up on the end of the year. So make sure you get the 2023 budget and make sure you get the 2024 budget, because the seller is going to be required to give that to you as soon as if your deal's not done, they're going to need to put that in to the deal once the year turns. I would also make sure that you ask if there has been any discussions that have been tabled about assessments or increases in your condo association or HOA dues, because if they haven't been voted on, then you can't disclose it because you don't, it's not a fact yet. So I would make sure that I send an email to the condo association management company and the association president and ask them for, confirmation that nothing's been, talked about, tabled for the next year, over that past year at least, maybe even a little bit more, but just to cover yourself, because the last thing you want is to get into the condo and then the next week you've got a notice.
Yeah. Or just avoid getting into a building that's falling apart.
Yeah, but even it's true, but even still, it doesn't necessarily mean that the building's falling apart. We'll just go back to the fire pump as an example, because I had to deal with this on the beach, and they had to put in a new fire pump, which was outrageously expensive, and it was done during one of these, new required inspections, and that wasn't something that they were planning on for that year, but the company came out and said, no, you need the funding and you have to do it. So that's how they got the assessment, which means they raised their dues. So milestone reports are very important as well. Make sure you get a copy of that.
And if the HOA fee gets outrageous, it's going to be more difficult to sell.
Oh, of course. Of course. I mean, that's just fees and funds. When we're talking about that, you got to look at what they cover. A lot of times they're covering water, trash, cable. So it's worth it because they're getting a better deal, because it's a group. But at the same token, you just have to weigh everything out and really evaluate it at this point.
Yeah, because, if you were buying a condo, what would you be looking at? Just straight out. Say
Because we've looked at buying condos. I would look at all those things. So if I went into a condo building, I would really want to know, how old is the elevator? Do they have the reserves pre-set aside to cover the elevator? When was the last actuary study done? When was their milestone report? Let me see that. I just want to make sure that they have the funds set aside and that they don't have any giant assessments coming up, for unplanned events and large ticket items. Also, like drain pipes and plumbing, because we're talking stuff that was an older building that could be galvanized pipe. Yep. For drains, and then sometimes those start to rot out, and then they have to do those special coatings that go inside, because obviously they can't, it's very, very expensive to replace the pipes altogether. So just those kind of things. I would look at any of that kind of stuff.
Would you look at the age of the building?
Oh, of course. That'd be all part of it. And that would be part of that milestone report, because the milestone report is going to cover big ticket items, structural stuff, cracks, paint, roof, those types of things. And it also ties in with their budget to make sure that you have enough money set aside for those items, and that you have a plan to get to those, to make sure that you have enough money in the future down the road.
So basically the moral of the story of this video is, if you're buying a condo, there's a lot more to look at it than don't just look at the condo itself.
Right.
Look outside the condo, look at the whole association as a whole. Just, a lot of these associations are going to check you out to make sure they want you to live there, because you might have to go for an interview.
Absolutely.
You need to check them out and see if you want to live with them.
It's very true.
So that's a big, big thing you guys really, really have to consider. Anyways, that's today's video. You have anything else to add?
Nope, that's it. Just make sure that you're working with a realtor that understands what you're doing and understands the complexities of dealing with condo associations. And we've just, basically just touched the tip of this. Those are some
we'll do more
overviews.
We'll do more videos on this condo stuff. But definitely look past the condo itself and look at the whole place as a whole. And look at the parking too, because some of them have some really weird rules. Let's throw a couple, like no pickup trucks, no motorcycles.
No motorcycles is almost every condo I've ever been to.
Yeah, so it's crazy stuff. All right, I really appreciate you guys watching this video. Again, do me a favor, subscribe. It really helps out the channel and it's greatly appreciated. And we'll talk to you on the next one.
See you on the next one. Thanks.
Bye.